Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 2 minutes past midday UTC. Apologies for being late. Had a couple of technical issues, but with you now. A big shout out to everybody that's joining the stream live. Can see the viewers flooding in. Big shout out to you all, and big thanks for your support. If you can do me a favor, if there's any problems with the visual or the audio, please do let me know. And also a shout out to everybody that's going to be watching this on recording. So, big day yesterday, big move in the market, obviously very news-driven event. If anybody had their eyes on the CPI print with 0.1% under, meaning that it shows that there's kind of this slowing down of inflation, but it's a very, very small sample size, guys. So do please bear that in mind. The Fed especially will be looking at a number of months for consistency in terms of those core numbers coming down. So we could be seeing a little bit of an overreaction. Markets looking to pump. Now, not trying to dampen anybody's thoughts on this. If we get some positive news out of the FOMC today, it could continue for that to pump higher as well. However, obviously in this market and the overall conditions, we still need to show a little bit of caution, all right? So I just want to look at what we're looking at on the charts at the moment. All right, we can see I've got the daily chart up at the moment. We're going to look at the different levels and why we've been expecting a move. Not saying we expected the move to the upside. It seemed the more probable of the two, considering the exhaustion that we had to the downside, which I'll run through as well. However, obviously it's massively news-based, so we don't want to be FOMOing into moves now. We want to be making sure that if we're looking for entries and our bias is bullish, that we can pick entries in places that suit. Right? We don't want to be FOMOing into moves, getting terrible entries, getting stopped out before we get an opportunity. Bernd, hey buddy. Big shout out to you and everybody else that's live today. I hope you're all well, guys. So, like I said, any issues with the visuals or anything like that or the audio, let me know. I'm going to pop this on full screen, guys, so we can make the most of this. Now, the reason that I've got this up here, and I always start, well, actually, let me show you exactly how I start. I like starting on the weekly, right? Because the weekly gives us for me in crypto especially, gives us our real kind of high time frame view. Now, the reason I got this area here, all right, is because this is the down candle here, the high volume down candle that led to this move higher. It's an area that we didn't retest, right? We got this expansion. We haven't retested it. Now, do we have to retest every area? No, but we most often do. Okay, so that's something to bear in mind. But that's not one for right now, okay? Where this was relevant for me, right, was when we were looking at this consolidation here. And let's just take this, which we would obviously look for on the lower time frames. This is what we were trading when we came into this level. When we came into this level and we came into this liquidity here, which is very often in the middle of the move, the 0.5 or the equilibrium. Then when we got this reaction back out, we set this higher. What we would have wanted to see, right, and incidentally, what I believe was drawing that higher was this fair value gap here, right? Price getting drawn into that, that's kind of drawing price higher. I would have wanted to see this high broken and retested. Then I would have been considering moves higher up into this fair value gap and certainly into these highs. But we didn't get that and price broke down. Sorin, hey buddy, good afternoon to you too. Hope you're keeping well. So now on a weekly scale, I'm focused a lot more on recency, all right? I know where the high time frame levels are. This is no longer of interest to us because this has been filled, yeah? So we're not interested in that now. What we are interested in as we go here, we're saying to ourselves, okay, where was the key liquidity, which we can see here? Now, we've really driven through that. But like when we get any kind of big impulsive move, yeah, for me, I'm always expecting some kind of relief, some kind of retracement. All right, we're going to look on the lower time frames how we can pick those out. But as we can see with these moves here, when we get these big moves, right, and we go all the way back up to here, and this is on a weekly scale as well, remember, guys, okay? So we got this expansive move higher. We took out these highs. Now, I don't want to really use the word paranoid because it's not right, but suspicious, right? I'm more of a suspicious trader, right, than anything. Because, and what I mean by that is when we've got key highs and key lows, for me, they're areas that I'm looking to be run, right? So there's liquidity sat below these. How price moves through those levels can tell us a lot. So we can see when we came in to interact with this level, bearing in mind we've got liquidity above all of these highs. Let me zoom in a little bit. Now, we need to remember our structure. Yeah, we're in a bearish structure. There's our low, there's our high, lower low, lower high, higher low, yeah, then this breaks that high, which is a very, very sneaky move, right? What you hear a lot of people talk about in terms of manipulation, all right? So as we go up to here, my concern here is as we have this impulsive move up, and what I'm bringing into to tie into this down here, when we have these moves higher, we expect some kind of corrective move. Yes, price can obviously do like we did here. We took out this high, we had this expansive move, and then we didn't get the correction until price corrected very deeply. And that was actually our trend reversal, right? But we see in this impulsive move here, we get this corrective move down, right? So even with this one, because we've consolidated here, yeah, the suspicious person in us says, okay, if we punch through these highs, have we just taken the liquidity above these highs? And are we now looking to break down, right? So what I'm then looking for is I'm saying, okay, well, if this is our bullish candle higher, what I want to see, and we'll break this down onto the weekly as well, but in terms of this is I want to see the week open. So this week opens here. I want to see price trade down and then go higher. We didn't get that. The week opens, traded higher, and then starts to break down. What that tells us is that we've taken out the liquidity above this high. This is the high that's taken the liquidity from all of these highs, right? And we've come across with this move, taken that liquidity and the liquidity above this week as well. Then we can monitor the weeks for how they open. This one trades up. That's where you can get your short positions in. We trade down, trades up, trades down, trades up, takes out this liquidity, trades down, right? So when we see these impulse moves, there's a few things that we want to consider. If it's going into a key level, we then want to see continuation via a bullish, in this case, week, which trades lower to draw on liquidity and then moves higher. In this instance, we trade higher before we break down, right? That, as we look at this and we analyze it, gives us an indication that price might be heading for a deeper correction, right? Now, we don't know if price is going to correct here, might correct into these orders in here, might come down to try and take out these lows or these lows before reversing. So our interest is on the individual candles as they're playing out, right? And these candles, as we can see, open, trade higher, sell off lower, open, trade higher, sells lower, etc., right? Now, again, when we get these drops, we do tend to get these corrective days, weeks, or periods, all right? So as we're now looking to trade back down, yeah, what we're saying to ourselves is, where's the next liquidity resting, right? That's always our question. Obviously, the weekly is a very long time frame, but it can still tell us a lot. So, for example, when we had this large drop here, yeah, remember what we said, when we see a big impulsive move, the same way as we did with these drops here, impulsive move down, what are we interested in? Well, we want to know what's drawing price back, yeah, or in any direction. And I like inefficiencies and fair value gaps, basically, right? Because the market likes to rebalance and the market wants to be efficient. So as we break down impulse move, yeah, if this day was to start correcting, this would be where I would expect to draw on that liquidity. Now, price keeps breaking down. We keep opening, trading higher, going lower, opening, trading higher, going lower. Now, this day is different. We open here, we trade lower, then we push higher, right? So on a daily scale, which we would look at, that then becomes our key that we're saying, okay, this could be a corrective move, yeah? And this could also be heading into this fair value gap to draw into it. Does it change our high time frame bias? No, it doesn't, because we can clearly see that we're still in a bearish trend, right? When we exit that bearish trend, right, is when we start making higher highs and higher lows. So we set this higher, come back down. For me, once we've set this high, it's still a lower high. I want to then see a higher low and then a break of this high, right? That's when I'm then thinking price is heading for liquidity here, here, and ultimately here, right? We're just playing this level to level. Imran Khan, my good friend. How are you doing? Good to see you again, buddy. Thank you very much. Blessings to you as well, my friend. Tino. Okay, just before we continue, there's a question here from Tino. Hi, BC. My question for today. How do you play your scalps when the London session is closed and your target's unreached yet? Do you take early profits and start all of the day again the day after? Oh, great question. If I don't get round to that in a second here, remind me when we get on the low time frame chart, and I'm going to take a look at that for you as well. And another good point here from Now Jeremy Now. Love it. Looks like you're in a really chilled place in that picture as well, buddy. Yeah, exactly. So if you're someone that's into your patterns, Gartley patterns, We had someone actually on in the last session last week where we were discussing morning stars and shooting star patterns or candles in that respect, and where we're looking for different types of patterns, candles, to tell us when there's possible reversals. Right, I'm not much of a pattern-based trader. I use inside bars quite a lot because that shows me when you've got kind of like exhaustion in trends, or certainly trends that are looking to kind of either cool off a little bit and possibly lead to reversals. But really, really good points, guys. Really good points. Tino, do please remind me of that, mate, if I forget shortly. So we're on our weekly here, right? Now, the reason that I hammered onto you about that is because we're looking at the same principles, right? We had this big drop, had this fair value gap. We get this corrective move. Where are we expecting price to correct to be drawn into the fair value gap, right? So that's fine. We then get another one here, this small fair value gap here, which is filled by this move, which then allows us to pick on the lower time frames trades that sit with our original bias, right? This is the liquidity that we expect to get swept or taken, right? If our bias is correct, bearish, right? So we can see low, lower high, lower low, lower high, lower low, lower high. Now we have this big expensive move which takes out this key liquidity, right? So for me, what I'm saying to myself here is, okay, we've had this big move now. The chances are with these type of moves is that they get retraced, right? Or there's some kind of corrective move. So whether we want to trade that corrective move or whether we're just sitting and waiting to position ourselves for the next move, right? Because if we're still bearish here, we might want to say, well, we don't want to enter, we don't want to risk counter trend trading, right? What we're saying to ourselves is we want to kind of get to a point where we've got some confluence, look for a key area we might be rejecting off of, and then look to resume the trend to the downside, because we've got this key downside target here. Yeah. Not saying we're going to get there. We might not. Price could really take off from here. And if we break above this high here, come up and retest, then I would be thinking to myself, okay, maybe price is now willing to move up, right? This is before, of course, we look to plug in news events, macroeconomic factors, geopolitical situations as well, right? Just purely based on price action. So our theory is we've had a big expensive move to the downside. We expect price to correct. Yeah. We can see the draw of this weekly fair value gap, right? Which we're going to delete now as we go to the daily. Otherwise, we're just going to have a big grey screen. All right. And we're now looking to refine this. So what we can see here is as we refine this down, we can see our daily fair value gap now, right? And again, as we're looking here at key market structure, what I'm always aware of are where the highs and where are the lows, right? So as we can see here, we've got the key highs here. We've got liquidity sat above these highs. Look how we've got price can't move beyond that, and that. In fact, if we're saying to ourselves, what's capping the market from here, right? Then that's what I'm looking at as a key level. Because this is the high that we set and we've not managed to close above it. When we did here, we deviate, sell off aggressively down to sell side liquidity, which is down here, right? So what I'm always asking myself the question of is, if we've taken liquidity from the highs, yeah, and we've exhausted that, the chances are that price is then going to search out liquidity on the next side, which is down at the lows. I love how I'm getting all these like sex chat things pop up on my stream. Not even getting trolled by the Elon bots, unfortunately. Not quite there yet. Let me just block this idiot. Hang on. Right, so we've taken liquidity from the highs. Now we're trading down. We're then looking for liquidity from the lows, right? Or buy side liquidity, sell side liquidity. Okay. So when we're in here, what we're doing is we're just looking at these key highs and lows. Now, I get this question a lot. For me, and I know there's different people use different ways to pick swing highs, swing lows. For me, I have a really, really simple method, right? Is of 3 candles, and let's just use this as an example here, right? 3 candles, 1, 2, 3, yeah? What I'm looking for here is that low, that high, and that high, yeah, need to be lower than this high. So think of it as like a very crude but classic kind of V pattern, yeah? What you're saying to yourself, get rid of that. What you're saying to yourself here is actually better to draw it like this, right? As long as the middle high is the highest high, even if this one goes really, really close, right? For me, that's a swing high. So that's what I'm considering. If I think there's liquidity resting anywhere, I think it's resting above there. So as we're going down through the charts, right, that's what we're looking for. So is this a swing higher? No, because that high is higher, even though that one's lower, right? This would be your swing higher because that is lower and so is that, right? So then as price closes there, once the close of that candle, this becomes a high of interest, right? Why? Because we believe that there's liquidity above it. And then where would we look to trade that short to? Where's our next swing low, right? Not that, right? Obviously, that's the candle that runs it anyway, so it wouldn't be that. It's not that, it's this, right? Higher low, flanking at either side. So I'm a very simple creature, and for me, what I'm looking to do when we sweep liquidity one side, I dive onto the lower time frames. I'm asking myself, where's the higher time frame liquidity? So you'll notice I'm not getting my liquidity targets on the lower time frames, right? I'm still taking them off the daily because for me, daily, weekly levels, and obviously monthly as well, especially when you're trading more traditional markets, will always be our key levels, right? Because that's where the banks, institutions, hedge funds, bits and pieces, that's where they're trading, that's where the volume is, right? So very simply, we're waiting for highs to be swept. We sweep the highs, we get our breakdown pattern, then we're targeting the lows. When we sweep the lows, yeah, we then target the highs. So where's our next key high? Here, right? So then when we break down from here, we get our sweep, rejection, rejection, rejection. Where are we targeting? The prior swing low, right? Here's our swing low. This is our target, right? Now, again, we can see here, we actually sweep this one here, right? So again, trading's never perfect, guys. Say we got our entries in here, we're like, boom, we've got our entries, brilliant. Where are we searching for now? We're searching, for our buy side liquidity, right? Which is above these highs here. Now I'm going to mark that higher, and I'm also going to put this in here because this is something quite key for me, is if we have equal highs and equal lows, right? The main reason being, it shows us that price has made an attempt to get beyond that level at some point and has failed twice. To me, that signals that we've got, that there's a lot of sell pressure there. All right. C-Ron, haha, if only the sex pots were real. Yeah, exactly, mate. We'd all be living a good life. We'll be living a really good life then. So is this making sense, guys? How we're just looking for key lows, key highs. When we get them swept, we're looking for confirmation on lower time frames to then trade to the next key targets, right? In the same way that then when we sweep these highs, we're then searching out the nearest point of liquidity down here, yeah? So you sweep this high, come down, right? We don't actually take this out, right? We actually reverse here, we go above, and we end up taking out liquidity here and then moving higher. Not a problem, right? Because all we're doing is we're playing a game of probabilities. We're not playing a game of let's be right all the time, because it just simply doesn't work, unfortunately. So with those really, really, really simple principles, we're looking for what's drawing price higher. This is why I've got the fair value gap drawn out. This is the liquidity level, which has been set on a weekly chart, right? But we can see it's also relevant on a daily. We don't have any other daily swing highs before this one. So this is where I'm expecting stops to be resting and for breakout traders to have orders placed, all right? So as we move down, we can see we get this liquidity down here. And we've also got these equal lows. We haven't run them yet, but they're very, very much in my mind, okay? So we did run this, though. That key low was swept here. Now we've had this reaction. Now, one of the key things for me here is we've broken market structure here, right? And the other key thing, like I was saying about, is I'm always looking for what is capping the market, right? So what do I mean by that? And if you look back across my previous streams, you'll see I've been banging on about this for weeks, right? Which is this. Yeah. Since we set this higher, that's the key swing higher for me that price has not come and interacted with. When we did, 1, 2, 3, 4, 5, 6, 7, 8 rejections at that level, right? Now we get this big expansive move, yeah, this big bullish move higher. So what are we looking for? For me, and again, we're going to cover this at the end, guys, right? But we don't want to go rushing or FOMOing into trades here, especially when we've got high news or higher driving news events like we've got today, all right? So we're saying if the market's looking to rebalance, it's getting drawn up into this fair value gap, right? That's our thesis. So while we're in here, we're looking to be bullish from here to here, yeah? Also, if we were looking at this as a range, yeah? And I'll use this as an inside bar range, meaning that this becomes our mother bar, right? So for anyone unfamiliar, inside bar pattern is when you have this candle or any candle, that the following candles, high and low, are caught completely in the range of this candle's high and low. Can't even tweak beyond it. This has to be literally within this range. It's inside this candle, yeah? Inside this bar. This then becomes our mother bar, and this becomes our inside bar. Now, we're focused on this because at the top of this mother bar, right, our thesis, right, or our theory with an inside bar is like any range. Once we interact with one of the extremities, as soon as we come back within it, we expect to visit the other side of it via a 50%. Right? So you can just take a fib and then you can take your 50% line there. All right. But we're not as interested this week in doing post analysis. We want to really look at where we are and what we can expect. Now, we expect an expansive move here. Price has been consolidating below this level for a while. This bullish engulfing, this strong bullish engulfing was a clue that we may have some bullish price action. When we get something like that, what we want to see from our candles is we want to see sweeps, yeah? So we'll mark up that low there, and then we're going to start dropping down onto the other time frames, all right? Now, something else I do, and you don't see this from a lot of price action traders, but for me, I've always found it really helpful, right, is I'm using my B Pro to look at my divergences. Now, this particular indicator takes this from a number of different instruments, right? From 10, I believe, and then it works it out as a percentage based on those. But what you can see is they tell you when you've got these divergences, right? This disagreement from price and momentum. So we're saying to ourselves here, this gave us a good indication. This told us that we were coming into a key area here that we might be looking to consolidate or correct. But if I'm looking at this here, I'm looking at this as a 9% divergence. I'm not crazily worried about that, but I am definitely going to factor it in, right? But you can often get them as well after large moves, and they can be leading to corrective moves. So here we are. Hopefully this is all nice and clear. Daily high side liquidity. Again, I'm not saying we're going all the way up there, all right, guys. We've got our sell side liquidity here, our liquidity from our lows immediately sat there. And now we're saying, okay, what are the next areas that we could be targeting? So for me, when we've got this naked high sat over here, yeah, I just want to be aware of that, right? I want to look for any particular area that's not only going to be a draw on price, but that we could be facing a possible reversal, okay? So as I then go down onto my 4 hour, let me just turn the session breaks off for a second. Sorry, let's keep that nice and clean. Again, we've got our fair value gap daily up here. We can see that price is making its way. Now, for me, on a 4 hour, obviously we've got a clear swing higher here, yeah? So that's of interest. It's definitely of interest, right? And as we refine it down further again, using exactly the same methodology, we've got this 4 hour fair value gap here, right? So let's label that up. Now the picture's starting to become clear, right? We've got liquidity resting here, right? And then we've got a draw on liquidity here and a larger draw on liquidity here. So we can see how price is getting pulled up, right? So would I be looking to enter longs here? Again, I'm overly cautious at the moment. We've obviously got the Powell taking the mic later. We got the FOMC. So I think after you have a big run like this, what I'm looking for is I first of all wanted to see a daily close above this level, right? And specifically above these highs. Yeah, so this high was taken here. So this then becomes our key high. So just very quickly, because I forgot to cover this on the daily, let me show you this. This was really key for me, having this daily close above here. Yeah. Now, fine, we might get caught in a deviation here and price comes back in the range. However, if it does come back within this range, our high probability trades are to the downside. We're looking for mean reversion trades, right? So if we're wrong here, we're wrong here. We take our 1 hour loss, we get out and we get back when we're back in the range and breaking down, right? Targeting 50% line, then the lows. However, if we're going to continue this move, right? And again, I'm going to take this back to the 4 hour now. Then what I would want to see is I don't want to just FOMO into something here, right? Why? Because where's my risk, right? It has to be below either this low at very best or this low. And I've got this as a potential rejection point. My risk to reward is absolutely horrific. So I can't make an allowance for that. What I wanted to see here for continuation higher was price draw back into this, right? And then move higher. Okay, so that's what I would be interested in here. I'm saying, okay, if price is going to be looking to correct here, if we're looking to move up, then I want to see price draw into this fair value gap, rebalance, yeah, and then we would look on the lower time frames for a move higher. As it goes, price is continuing to steadily grind up, so it's not really any entries here for me at the moment. Okay, now as I go on to the 15-minute. Right, and we can see this is what made that high to that low is what's made our fair value gap. We can see how price is kind of grinding up. I trade these sessions here, London into New York and then into London close. I will sometimes trade the New York PM session as well, but my trading is predominantly done through the London session, which starts, for me, I'm monitoring the charts pre-open at 7 a.m. in London, right, and then rolling into the New York when I start monitoring this really between 12 and 1, and then we've got 2:30, which is when we go live. Because that's where the highest volume is, right? And for me, that's where I look to target for those sessions. By the way, as well, because I get a lot of questions about this, I have no affiliation at all with this gentleman or lady who makes these, but I think they make an excellent indicator. For those of you that keep asking about the indicator is called ICT Kill Zones by this person called Tradinator, and they've got a really cool logo, obviously, which is the Terminator, Arnold Schwarzenegger from the original film. All right. So if you're interested in that, again, don't just put these things on your charts without studying them. Please make sure you study them. I would highly recommend ICT for that side of things. But and again, I'll probably get some abuse from the purists here. I love ICT. I took his original course back in 2017. And I think he's fantastic. I think he's got an unbelievable understanding of price action. But for me, I like to study lots of different people, lots of different theories. I like to really be a student of the markets and then make my own systems and strategies based around, what I've tested and what I've seen to be true. And I've made systems with moving averages over the years, and I've made systems using divergence and range-based systems. So for me, as much as I love the core price action concepts of ICT, and someone I recommend everybody study if that's your kind of realm, I also do recommend that you kind of look into other stuff as well, so that you really keep your horizons broad. But if you are interested in time zones, whether you're using them based on ICT's methodologies and teachings or other methodologies and teachings, then I would highly recommend this one. It just works automatically. It works when you put it across Forex, traditional markets, and bits like that as well. Okay. So sorry, I wanted to get that out because I know a lot of people have messaged me, and I've tried to get back to most of you. But if I haven't, and I hope you guys see this, then hopefully that's of use. The other one that I was using for the divergences is this, which is our own indicator called B Pro. Burb Nest Burbicator Pro. All right. And if you're interested in that, drop me a message, guys, or find something down in the link, and I'll send you some more information. So before I digress, let's get back to this. So what I want to see, now we can see here, so we just dropped this down to a 15-minute time frame. So what I'd be looking for here is we're within this kind of trade zone for me, which is now going to go up to sort of about 7 p.m. tonight. So let's just put a little mark on that. It's not that I wouldn't trade it later, but that's my real kind of key trading time, right? So let's just put that little line on here. What I wanted to see in here was price come up like it's done here, maybe clear out some of these, but then I wanted to see price come back down, correct into this, and then I would have been looking for a move like this, right, to go long. So this move here is just very, very simply, we're moving down, we set this high, we purge this low here, then when we close above the high that took the low, we then look to enter on a retest here or within a fair value gap, an inefficiency that forms in here. All right. So let me show you that a little bit clearer for anyone that's interested. So if we've got our key level here, should we do this with this actually? Key level. In this instance, we're looking to go long, right? So we want to see price come down, sweep. So we go into a key level, and then our trigger for going long is this, right? So We've come down, we've taken out this low, and we've gone into a high time frame area, right? Be that an order block, be it a fair value gap, support and resistance, right? Then, when price reacts here and closes above this high, right? That's the high that sweeps the low. When we close above it here, we can put limit orders on here or enter in a fair value gap that's below it here, all right? I just made this name up for it. I call it a breaker line. Sure, other people have other names for it in bits and pieces, but for me, it just helps people understand this idea that you're kind of breaking this structure. You're then looking to draw on its liquidity. You're looking to retest it before you're then moving higher, all right? So that's what I'd be looking for. Now, I'm running out of time in this today, right? So fine, if we get that, no problem. If we get that drop, but it doesn't happen within my execution zone, not a problem, all right? But if we're dropping in here, we get that market structure, then I'd be looking to trade it to the upside. And I've got a really, really clean target up here, right? Remember on our high time frame chart, what we've got labeled out. Our first target here on the 4 hour, nice and clean. We've got this naked high or untapped high, which we expect liquidity to be above. So if we get this pullback, we've got a really nice clean target to trade it into. We don't have to hold it all the way up here, into our 4 hour or above, our higher time frame fair value gaps. We're just saying we believe that's what's taking price higher, but then we still need to look and make sure that we're getting suitable entries, all right? We don't want to be rushing in to trades, all right? And I'll look at a little section back here in a minute for Tino just to cover the question about how trading with inside the London session or if we're waiting for the next day's confirmation, all right? So got a quick question here from Bern. BC, how about the ICT DR IDR concept? Do you trade that, and is there something like that for the London timeframe? So I don't really. It's a good question, Bern. I think it's not something that I really want to go into kind of covering too much or teaching too much. I don't kind of really like going over anybody else's specific concepts. If it's concepts that I've taken from someone that I kind of use in my own system, then I'm much more confident about it. But what I would always do, not just out of respect, but just for the sake of the clarity and the purity of the teaching, is I would just go into there. I would go and look into Michael's Core 2022 mentorship and look at it in there. It's also in the 2017 original mentorship as well, and it might be in one of the other little series as well. But if you go into Google or if you go onto YouTube and you type in ICT DR, so IDR concepts, it will take you through to that specific lesson. You can really kind of learn a lot from that. From me in these type of situations, my focus is really on where the liquidity is sat. Yeah. Then what I'm doing is I'm looking for key breaks or reversals at those liquidity levels, and then I'm looking for low time frame market structure shifts, and then for price to draw into a fair value gap, right, or for price to go into either a breaker or a key order block. That's really kind of as simple as I keep it, and I do break it down even simpler in terms of using my my breaker line sometimes, especially in crypto. A lot of these systems are made and refined for forex. Yeah, I watched them all, but it's okay. Yeah, good, Chris. So it's all about New York. So, yeah, it is a little bit of a thing. It is very much set around that. Although, where ICT will use the New York Open, I use UTC Open, right? So, to kind of touch on this point a little bit, let me run through this with you guys. This can sometimes be a really, really easy way to just kind of keep your trade concepts in mind, right? So we're going to look at this in terms of why we would be bullish now and where we would be looking to take bullish trades, all right? So as we can see, as we're coming in, I'm looking at these interim highs and lows. We've got our high, low, set this high, right? Higher, low. This high here, and the reason I'm drawing that across is because you often see these key highs respected when you get these impulse moves through. Now, this move here, this impulse move, this move with a lot of energy, right, is telling me that this is looking to move higher, right? And hopefully, I know this seems high time frame now burned, and the same as well with Utino, but we're going to use this to decant down onto the lower time frames, right? So as we break this level here, right, our assumption now is that price is going to continue higher, right? Because we've now broken market structure to the upside, and now we're looking for moves higher. Now, this can be really, really tricky, right? But The patience is the key in these moments. All right. So, quick question there from Anik. Upside targets. So yeah, in terms of upside targets, mate, we're looking at this naked high here because we clearly had something stop the market. This long upside wick here tells us that there was key sell pressure there. So we would expect that once again when we get there. When we drop down onto the 4 hour, we've picked out this interim target, which is kind of relative equal lows here, right? When we broke above that, which we've done now, similar to this move here, where we break above this, when we took out these key highs, right? Our next realistic target in this particular instance here would be any highs resting above this, but then ultimately this up here, all right? So as we go up here, this is the move that punches through this resistance, right? And this tells us then that we look to go long. Now, we're going to look at this on the lower time frames, but what you want to see from a bullish day is you want to see a bullish day open, yeah? So remember, this candle here has come up and closed. This candle opened, drew higher, took out the prior day's high, which is always important. Prior day's high, prior day's low, right? So this traded higher, took out the prior day's high, came down and closed here. What we want to see from a bullish day is price open, trade lower, yeah? Take out sell side liquidity, and then we're looking to trade it higher, up first of all, when we close down, right? We're then looking to trade this up to the prior day's higher, right? So we're going to look at that when we get on there. We don't. We stop here. Price comes down. What does it do? It takes the prior day's higher and then it breaks down. So what does that allow us to do? It allows us to get out of the trade, right? Now, price breaks down and fails, yeah, to take out this low. But the following day opens and we trade up. What do we trade up into? The prior day's high, right? I know this seems a bit monotonous, guys, but just bear with me for a few seconds because trading really, really can be like this sometimes. And this is where it will help you not get into bad positions or getting on the wrong side of them. It won't mean you won't do it entirely. Everybody does, but this can really help. So remember, we've just taken this liquidity here, right, which happened by price opening and trading higher. If we wanted to be bullish, we would want to see price open, trade lower to draw on liquidity from the lows, the sell side liquidity, using that to fuel a move higher, right? Which we did here, and great. Let's say we got in a really nice position here. Price trades up, but this day doesn't trade as we expect it to, right? Price trades down and closes here. As this day trades up, we're taking out the prior day's liquidity, meaning that we can expect a reversal. However, as we see here, the day opens. What do we get? A big takeout of liquidity. It takes out the liquidity above these highs, right? Also takes out the liquidity above this high here. And then we have this really big up wick, right? Meaning that there's a lot of sell pressure driving price back down. We then close back within the range of this candle, right? So that's the high we took out. Price came up. This is the fact that we're seeing a lot of sell pressure here, yeah? So now as price comes down into here and comes and closes, what we're then looking for is we want to see a run on liquidity of the lows, right? The same way that when we've been running liquidity of the highs, we've been getting these rejections. We now want to see the lows run in liquidity. So we have this low here, yeah? And then we have this key low here. So let's just pop this on replay for a minute, and then hopefully, guys, we can answer some of your questions in terms of how we're looking at this, right? And how we're looking at it in terms of time zones and how we would look to execute. So we've got our key highs and lows, right? Now we know on bullish days, we want to see price trade draw lower before it goes higher. The days where price draws up and sells off, we're not interested in. We're then just monitoring the liquidity below the lows and then waiting for our structure breaks, all right? So I'm just going to pop this onto a 15-minute and we're just going to focus really, really purely on price action, all right? And structure, really, really importantly on structure. So let's go to the beginning of this. And you can see immediately as you step off of a daily onto this, how much we get this noise, all right? Now, we wouldn't be looking to execute on a 15-minute chart. We'd be looking to execute on a lower time frame. But I find the 15-minute chart gives us some really good insight in terms of our market structure shifts. So what did we say here, right? And let's put our session breaks back on. So you can do this, guys, if you're unaware of it, this little sun emblem down here, yeah? You can just click that. Your session breaks are at the bottom. Once you click that once, it's on. When you click it off, it's gone. And hopefully you can see these really faint grey lines just in the background here, all right? So what did we say we're looking for? We want to see the daily open. We want to see price draw higher, yeah? So draw lower and then look to make it a break higher, yeah? So we're looking at this day between here and here, yeah? And if you can't see the lines clearly, what you can take is these blue dots, which signify the start of the day as we're heading into the Asia session, right? So what do we get here? We're looking for price to draw down, break structure to the upside, yeah? And then what do we get here? With this long wick, yeah? This comes up. This is that move that we're talking about, which is engineered to generate liquidity. So again, not interested here because we're coming up, have this big sweep, but it breaks straight back down, yeah? We're not getting that bullish market structure. And when we're beyond London here, a little bit more, that's it. I'm out, right? Now, as we come into this day, however, what are we looking for? As we said, we want to see price open, which it does here, yeah? Then we want to see price trade down, right? Then we want to see a break of structure, which we get here. So this is our shift, which will be our MSS, right? Market structure shift, which we get here. So where are we entering this trade and where are we targeting, right? Remembering our bias is bullish. We're saying to ourselves, if we see price draw down, yeah, into some liquidity, we can be drawing down into this order block here, for example, right? In an ideal world, you would want to see a low swept, all right? But we can go on to that, and it depends what kind of confirmation you want in the trade. But obviously, we'd be looking at this on a lower time frame where we'd be much more likely to have a sweep or a clear sweep. And in fact, your sweep would be here, which is that key low, all right? What makes up a key low? Remember, this low, because it's got that low and that low, are both higher than the one in the middle, right? So we get our sweep, meaning we've drawn on liquidity from the lows. We've now broken structure, this key high, this swing high here. See this impulsive move through it, yeah? See that candle? Let me zoom in a bit more. Yeah? So we see this candle move through. Where are we looking to enter, right? So you can either keep this very, very simple for yourself and you can say, okay, let's make this a breaker line, which again, just terminology that I made up years ago. So we can take that. If we take that as an entry when that candle closes above it, we would then execute a limit order on this line. Yeah. And that would be your entry. Your stop loss would go below this low, right? How I prefer to trade these moves, and again, you'd refine them down in the lower time frame, but I'm looking for the fair value gap. I'm placing my long position on this, the leading edge of it. I'm placing my stop loss below the prior swing low, which is here. And where's my target? This high. I don't need to be any greedier than that, right? And I can even take it down to the volume level, not including the wicks. Now, why would I look to do that? Because a lot of people say to me, well, you get our trades really early, right? And you might be seeing this massive move to the upside. But I've not got a problem with that, right? Because if I really do genuinely believe we're still bullish, which I do, remember our high time frame bias, we've just banked 3R there, right? Now, let's say your risk, your R here is $100. You just banked $300. That's bought you the attempt at several other trades now risk-free, yeah? But obviously, capital preservation is key. If I held on to this too long or got too greedy with it, look how quickly it retraces and takes us out, yeah? So for me, I want a really clear and clean local high to target for longs or local low to target for shorts. Fine. So remember our principles. We've run a key high, yeah? We see and expect a breakdown, but we don't want to lose sight of our bias, okay? So if we were then looking to draw this in here, so we've entered right at the beginning of London, yeah? Now, we run these highs. Now we're saying to ourselves, well, if our bias is still bullish, right? What are we looking for here? Remember what we said, yeah? We want to see some lows swept. Where are these key lows? Right here and right here. And what do we get? We get a beautiful sweep of both, okay? So as we said before, once we get our sweep, then what are we looking for, right? We want to see that sweep because that generates liquidity, yeah? But what we have here, right, is we need to see the high. Now, the high that sweeps the low, unfortunately, is all the way up here. So again, if we were looking to execute this on a lower time frame, right, what we would be looking for is a sweep of the lows, price to close above the high, and then we'd be targeting these highs. And this time frame, we don't get that, right? So there's no trade there. Now, remember what we said again. Our bias is we want to see the day open, trade down, yeah? Seeing all of this trading down, trading down. We're not closing above any key highs here, right? So here's our high, low, yeah? As we're coming up, notice how we're not setting these. Now, we come up, we get above this interim high here. We have a draw on liquidity in the London session. So maybe we get caught out here, right? Because we had this lovely sweep, right? This would be our interim high here. Price comes above, but look what we don't have in here. We don't have the inefficiency. We don't have that fair value gap. Why don't we have that? Because the impulse move up hasn't been aggressive enough, right? That's what we need to remember. In the same vein that while we run these lows here, this is the high that runs the lows. See how we don't get that aggressive close, which doesn't leave a fair value gap, right? So that's what we're always asking ourselves. That's why we want to see these impulsive closes. You want to see that powerful move through a level, okay? So if we're looking at it and we're coming into this day, let's say this is a no trade zone. And this is just by my rules and parameters, right? Because these are the sessions I'm trading. If you're looking to trade the close into Asia, right, then you very much get that move. You don't only sweep these lows, right? You've then got the sweep of this low here, which the origin of that sweep is here, right? So remember what we said? What are we doing with that? We've got our inefficiency here, right? We've seen it as it's had this impulse move higher, which affords us our entry over here, right? Now, you could set a limit order on the top of that line and then your stop loss under the swing low here. Again, where are we looking to target? This high, the untapped high, all right, which is here. So that's if you're willing to trade Asia. I don't. Obviously, I'm asleep. All right, as I go into the close, I prefer to get fresh at the charts and say to myself, okay, what have we got here? So for me, that would be your entry if you'd mapped out Asia. For me, what am I doing? I'm waiting for price to open, correct back down. So we're in London here, right? So I'm not trading before here. So as we see, price is just trading down, right? So what am I looking for? Yeah, I'm looking for price to run a low. So swing low. Why? Because that low and that low are both higher. And again, it would be more prominent on a lower time frame, right? There's the low. We have the sweep. What do we want to see? We want to see the high that sweeps the low have a big impulsive move up, right? Now, we don't want to FOMO in here. All we're saying to ourselves is, well, is it going to come and rebalance this? And once again, we've got our clean target here. We've got our extended target here. This is the mother bar high, remember? All right. So we're not cherry picking. We just put it on this outer layer. You can, as I will do sometimes, you can add orders at the 50% line as well. So put maybe 60, 70% of the order there and then some more of the order under here. But to keep it clean and simple, right, you can have that. And then we can put our stops below the swing low here. Yeah. And then our first target just needs to be 1.5R. We get 1.89, right? And again, we can take the majority of the trade here and then we leave some to run in case we get our extended target, right? Which is 2.65. Now, you can refine these entries down as you go to the lower time frames, but you really don't need to. Social media is crammed full of people that are getting these ridiculous wins and these huge R's, but in truth, maybe they are getting them and absolutely good luck to them. And I know some amazing traders that do. I really, really do. You know, like Trader Dank, just an absolute legend. I mean, that guy just freaking kills it on a day-to-day basis. And some of the guys I work with at the Nest, I couldn't respect them enough, believe me. But a lot of the people that I work around, and I don't include Dank in this purely because he is just such an incredible and focused low time frame trader. He really does smash out these big R trades, right? But you get other sides of it with your big R low time frame, which is you're losing a lot to fees, right? with these kind of trades, I would always recommend people just set an achievable target and be really happy with that target, right? Because, like we said, we made 3R on that one, right? Maybe we took a loss in here. Maybe we didn't allow for the fact there was no fair value gap to draw into. Maybe we played the breakout line. So our 3Rs become 2R, which as long as we're patient here, we close out most of the position here at 1.8, a little bit more of this up here. So let's say even worst case, we made 2R on that trade as well. We're still 4R up, as we go through the week, right? And I know this is trading weekends again as well, which, might not be your cup of tea. Now, the last thing I want to cover with you guys, right? And I know we had some questions here, like one from Tino. Tino, give me a shout if I haven't answered your question with that, mate. No, actually, let me address your question now before I move on to this, right? Make sure I've got it answered properly. So, how do you play your scalps when the London session is closed and your target's unreached yet? Do you take early profits and start all over again the next day? Really, really good question. So, I'm actually happy to hold positions. So, let's say, for example, like here, right? As we zoom in, we've taken this position here. Here's our entry. We come a little bit short of it. Okay, we actually do tag this one here, right? But using this as an example, right? This obviously tagged us in at 11 o'clock at night or almost midnight, 11:30. I will either have a limit order set on here for X amount of the position to really clean that out, to make sure that I've booked that, in which case then I will automatically move my stops to entry, right? To just de-risk the trade. However, if I wanted to hold this, let's say our extended target's up here, then I'd be happy to hold that through the night, knowing that I'd just set my stop loss so that I couldn't have some kind of like random liquidity grab or a news event or something come out that triggers that. So as long as I book my profit, I'm happy to keep that position open. However, if we were looking at a situation whereby, let's say we decided to enter here, for whatever reason, I know it's silly because it's right towards the end of the day anyway, I would still hold my conviction, right, that if my theory is correct, that price is heading for liquidity on the opposite side. So it's taken the sell side, it's now heading for buy side. So for me, I'm happy to hold. I do like to close trades out in the day, especially if I'm trading London, New York, right, because it then gives the trades a while to play out. But I'm certainly not hesitant to hold them overnight, but I will always move my stops up, right? And you know what? You might have a really great trade that you get stopped out overnight. And again, I put them in a little bit of profit just to account for fees, bits and pieces like that. So I've trimmed some, moved the stops up to an area that I'm happy with. If I get stops out overnight, fair enough, but I'm happier to do that than risk either missing out on this. And I might only have 20, 30% left in this trade here, by the way, Tino. I often take very heavy profits at target one, just so that for me, I prefer to book profits little and often. All right. So I hope that answers it, mate. If it doesn't, please do ping it back in my questions or come and grab me around the nest, and I'd be happy to go through it in more detail. So just the last thing I wanted to cover with you guys was this, right? Banging on about liquidity all the time. Hopefully it's really made sense. But we got this key high here, yeah? So this becomes an extended target when we break beyond this, yeah? So we've got our target here. We would need to do this on a low time frame, right? But if we're extended target here, this day opens, I want to see price draw down on low time frame, break structure, and then head for that. By the time I get to London, we've already run that high, yeah? So what am I telling myself there? I'm saying to myself here, this is our mother bar range, high and low, yeah? I'm saying that if we break back down into this here, yeah, lose structure, which we've already done, I'm then looking for that impulse move down. And where am I targeting? I've got a really clean and clear first target. Naked lows. Oh, definitely not that, right? Naked low or untapped lows where the liquidity I'm aiming for, right? Again, I'd look to refine this on the lower time frame. What I would be looking for is this impulse move down. I want to retrace into this fair value gap, the inefficiency that's left, and then I would trade it into this, which is that key target. However, we always need to be aware, right, that if that's the theory, we get tagged in here, what's our ratio down to here? Because if we're following the rule that we want to put this above the swing high, that swing high is too high. If we're playing a fair value gap move, let me zoom in for this for you, we can target the start of the fair value gap. So the fair value gap is 1, 2, 3 candles. This is our middle candle that contains the gap. You can put your stop loss above the first candle of the 3 candle move. All right. In this instance, this would be touch or go for me. Touch or go? Touch and go. Because it hasn't quite reached a 1.5R. I like to see a 1.5R on there often. All right. But hopefully, that's something that, it's open to your interpretation, it's open to your risk profile. But for me, I just want to get you inside my thinking of, if we've deviated the range higher here and we've taken liquidity, we've now broken into this. If we're breaking down here, think of it that price is now searching for that next liquidity in order to reverse it. All right. Awesome. So, Bernd, I'm not sure if this has answered your question about New York, mate, but please do come and hit me up with any questions like that. I'd be more than happy to take a deeper look into that. Come and grab me at the Nest or come and grab me on Twitter. By the way, guys, if you're not following me and you do want to follow me, that's my Twitter handle, BC Richfield. You see it, the one with the dinosaur. And also, I really do recommend, guys, if you're interested in trading, you want to refine your trading, you want to get yourself prepared and really kind of build in this kind of what could be a potentially extended bear market. If you want to know how to trade the markets both ways, come and have a chat with us at the Nest. We'll hook you up with a free trial. You can come and be part of the community. You can come and see the differences that can make to you. Or if you want to get yourself in a position where you're better prepared for the next bull run, right? So I know a lot of people aren't interested in trading these conditions. They want to just go around, learn lessons that were made from this, make sure that as they're investing and getting prepped for that they can then start to look into it and prepare themselves. If you can do that, guys, and you want to come join us, great. Please do. Information's in the description. I'm also live a couple of times a week. I'm more than happy to share my thoughts and my feelings and trade setups and that on here. And also happy to help wherever I can. All right. Now, I get a lot of people saying to me, yeah, you're part of a paid group, blah, blah. I am. I'm very, very proud to be part of it. I see every day how hard these people work, that I work alongside, and they're a massive inspiration for me. Now, there is a lot of good information in the public domain that you can get for free, right? Don't feel like, and I know it's not in everyone's reach to be able to pay for stuff either, right? But if you're going to study from the free stuff, make sure you understand who you're studying from, what it is they're telling you, and just have a really, really key focus on an area that you want to refine yourself in, right? Because the difficulty with YouTube and Twitter and all the other stuff is you've got all these big distractions. You see a trader nailing like a 7x trade, then you want to be a range trader. Then you see someone nailing something with moving averages, and then you want to do that. And then you see higher time frame. Just keep an idea of the type of trader you are and make sure that you're taking your study as seriously as you're taking your trading or anything else in life, right? And you'll really, really go a long way. But I do really recommend being part of a good community. I'm really proud of the community that we've got over at the Bird Nest, but, it's not saying it's the only great community out there. It isn't. There are others as well. Just find a good fit for you and be around people that are going to help support you. Be around people that you know are real professional traders, not people that are just putting up the odd win and bits and pieces on Twitter. But just commit to it. And I think having a community is a really good thing, is one of the last things I'll say, because it really helps you get support. It helps you get feedback. All right. But, Bern, no, it's clear. Awesome, buddy. Awesome. If you do have any other questions, though, mate, do come and catch us. And I absolutely love that picture, Bern. You look like one absolute funny guy to go and have a couple of beers with. Right, guys. So look, I don't want to diverge too much into this, but what I will say on the far side of this is if we get our ranges correct, range high, deviation closes back within the range, target the low side of the range. Run the low side of the range, close back within the range, target the high side of the range, right? Now, it doesn't always work because look, high side of the range, right? We go into our London, New York session. We have our run on liquidity. Yeah. Lovely. We're in here, stops above here. Now we're targeting the low side of the range again. Yeah. But we don't get there before price reverses. Now, do you remember what I said about range trading before? We always want to be consistent, and we always want to make sure that we understand where our equilibrium is, our 50%. Yeah. So even if we were looking to get into a trade up here, here's the fair value gap. There's that. Oh, help if I put the right one in. So here's our short position, fair value gap. We're not going to cherry pick. We're right in on the low level of that. Stops go above the high of the fair value gap, which is here, right? Or actually, it wouldn't be, would it? It would be this one here. And if we target down to our 50% line, we get our 1.5, right? And you can see they're not always 1.5 or 2 or 2.5 trades. But if you're booking these little and often, right, then it does pay dividends in the end. And this one would have had you going crazy, right? Because you've come within, I would imagine, a couple of bucks of getting stopped out there. But the key thing is, if you want a wider stop and you believe this should be the key stop area, it's fine. Just make sure you've got the risk to travel it down to here. And in my opinion, you want about a 1.5R. All right. So look, guys, I hope this has been really, really clear. I hope it's been helpful. I know I do waffle on these things, but it's only because I really want to try and get these points across. One thing, if I was to say a really key kind of takeaway from this, guys, that I would want to leave you with, would be kind of don't discount your high time frame bias. Yeah, we've done all of this just looking at prior days high, prior days lows, key levels that are capping the market, right? And you know what? If you miss this move and we don't get this retrace and we don't get that and price pumps all the way to the moon, there will always be other opportunities. Yeah, there'll always be other opportunities to get in the market. So for me, I'm looking at this now. I'm thinking, do we get this corrective move down? Maybe FOMC, maybe they're a bit more hawkish because they don't like the kind of dovishness or the bullishness that the markets have interpreted over the last few days. All right. And then we just want to have a cheeky eye on the DXY as well, our dollar index, just making sure that we've got these kind of key levels in mind. Yeah. Because for me, and I've done this in an orange line here, this is going to be a key level for this to draw down to. And then this is our next key level below that. Maybe we're looking at the order blocks. Yeah, maybe we're looking at this down candle before the move up. But I would say that's your kind of region that you're looking at there. So it looks like there's more potential downside for DXY, which is normally a very good sign for risk assets. And then the last thing that I'd always recommend people check is ES or your S&P 500. ES is just the mini contracts, all right? Just smaller contract sizes. And again, what we're saying to this is we're saying, well, this is a correlated asset to BTC, right? And what we're saying here is, okay, look what happened. We got the run on that. Again, exactly the same. It's a weekly liquidity level, same on the daily. Price ran up into that, and then look at the sell pressure there. By the way, guys, another person, I have no affiliation with them at all. And if you do connect with them, just say that BC says hi. But Crypto Chase is a really fantastic guy. I've come along here a lot of his stuff recently as SC recommended him. Obviously, SZ, who's a total legend. And I really recommend all my brothers over at Bird Nest as well. There's some amazing traders over there. Make sure you're checking out people like Bast. Make sure you're checking out people like Razoon. Jay, who's trading Tank as well. Pedro, if you guys are interested in systems or algorithmic buildings of systems, that guy just blows me away. Julian, who's just the most incredible fundamental analyst. And again, we're using these advantages. When you surround yourself with really good people, they make my life easier because they're able to alert me to things that are going on. We never affect each other's bias because we're all independent traders with very different systems, but that collective mentality and knowledge can really go a long way. So at the moment we're here, I'd like to see this hold, this area, right? If we can hold that, I think I'd feel a lot more confident that price is just kind of consolidating here before I push higher. Why is it this? Because we've come in, resistance, punched through it, retested it, sold off, come back up now. Are we going to hold it this time, or are we going to see like we saw here? Ran these highs, sent it back down. But for me, if we've seen resistance here, turn support, break down, retest, sell off, we've now broken through again and retested it. We start breaking down below this, we've got a nice clean target down here, all right, which are these lows. So look, guys, almost bang on an hour. Not really as short as I was hoping, but I do hope you've got value out of it. Just like to wish you all an amazing week and weekend. I am going to be live right up to Christmas as well, so I will see you guys before then as well. But wishing you and your families all just the utmost health. I hope you have a wonderful build up to Christmas. Do remember with the time that you have, don't spend every day, don't spend every moment in front of charts. I know it's a tempting thing to do. Spend some quality time with family, friends, relax, and just study when you get the opportunity. Make sure that when you come back in the new year, that you're the best version of yourself that you can be. All right, guys. So once again, just like to say a huge, huge thanks to you all. Really do love you having you on the stream. Some great questions again. Have a fantastic week and weekend. And I will catch you guys around the nest.